Aloha, this is Kurt Nielsen with eMortgage Hawaii, and this is your mortgage market update for the week of June 4th, 2012 for the Hawaiian Islands. I want to start off by just talking about what happened on Friday. We just absolutely blew through the lowest mortgage rates of all time, and it was as you probably saw, the Dow dropped quite a bit on news of unemployment, and that caused mortgage rates to drop significantly. We are now solidly at a 30-year fixed rate of 3.375%, and for a fee of 1.875%, you can actually get down to 3.25%. Never happened. This never happened. We're going to talk a little bit more about how to market this and help to move property that you've got. I also want to talk about USDA loans. Those rates have dropped also down to 3.375%, and you can get buyers into homes with no down payment and all their closing costs paid through USDA. And finally, we'll just talk a little bit more about HARP 2, where it's at. It is helping some borrowers that couldn't get refinanced in the past. Still not the program that we had all wished it had been. So here were rates on Friday afternoon: 3.375% with a fee of 0.875% for an APR of 3.498. And again, you can get as low as 3.25 with a fee of 1.875%. And I think this should be used to sell at open houses, kind of one-day specials, or maybe with a seller participation. So what's driving all this? It's mainly just really negative economic news. The Dow dropped on Friday almost down to 12,000 points, so that's almost 1,500 points off its high from just a few weeks ago. This is all being driven by bad economic news here in the United States and the problems in Europe. Greece is probably exiting the European Union, which I had predicted sometime in the early part of the year. And the question is Spain and Italy next? If that is, it'll probably break up the EU. A lot of investors are fleeing the euro and are investing in U.S. Treasuries and mortgage-backed securities. And even the German bond, I think it's only at 1.1% right now. The 10-year U.S. Treasury is at 1.47%. We've never seen that. So unbelievable rates. Everything's dropping. This is being driven here by a cooling U.S. economy. Initial claims were up this week to 383,000. They were expected to be way below that. Unemployment went up versus going down, what everybody expected. So it went up from 8.1% to 8.2%. And new job creation was only at 69,000 jobs, and it needs to be double that just to keep up with the population growth. So if we're staying this low, you know that unemployment's going to rise, and this may happen throughout the summer. Also, we always watch consumer confidence because the consumers are on the front line. They know what's going on with their pocketbooks. Consumer confidence has dropped. That means spending is going to drop. That means job creation is going to drop. So the federal government's going to have to step in. I think this month the feds are going to announce a new twist program where they're going to continue to buy long-term bonds and sell off short-term bonds, driving mortgage rates even lower, or at least keep them as low as they are. Other news was that the GDP was down to 1.9%. We were expecting a rise. So this is getting close to recessionary, because as soon as you get below zero, that's a recession. Pending home sales were down to 5.5%. The only bright spot, and this is something to really sell your buyers, is that home values are beginning to increase. Case-Shiller showed the second month-over-month increase in home prices nationwide. Oahu real estate's up real solid from February to April of 2012 to 2011, up 7.7%. And at least here on the Big Island, I'm sure the other islands are going to follow. I am projecting a year-over-year growth this August. So I think that we have bottomed out, and the real estate values are going to start heading up. And here it's being driven a lot by foreign investors. With the dollar so weak, the Australian dollar and the Canadian dollar and the won and the yen are so low, so strong against us, that it's sparking a lot of demand from foreign buyers. So this is a chart of the mortgage-backed securities. Remember, as the price of the security goes up, the interest rate goes down. So, I'm sorry, I should have said June 1st. This is now over $105 for the 3.5% coupon Fannie Mae mortgage-backed security. Never seen that before. Heck, before this year, just a little while ago, we'd never seen anything over 102. So we're, clearly at the lowest of all-time rates. Really a stunning performance on the mortgage-backed security market. And this has driven interest rates down precipitously nationwide to an average of 3.74% on the 30-year fixed, and you can see we're all the way down to 3.375%. And again, I think this is just profit taking going on here. Again, a lot of the local lenders are earning some 3 or 4% on every loan they're generating, which is not typical. I mean, that's certainly a windfall to the local banks. Okay, and here's just a recap of conforming and jumbo rates. The 30-year fixed with a fee of 0.875 at 3.375%. 15-year fixed is down to 2.75%. 7-year and 5-year ARMs are kind of holding. They haven't moved very much. They're getting to be the point where the 30-year fixed and the 7-year ARM are going to be the same. And this is a product of the federal government's TWIST program. Jumbo rates are not far behind. 30-year fixed about 4%, 15-year at 3.5%. And the 7 and the 5-year ARMs are very similar to the conforming ARMs. So fantastic rates. It can't get better than this. So there really shouldn't be anything holding your buyers back at this point. Again, this is the first time we've ever quoted a 3.375 30-year fix. So just share that information with your clients. And again, I think there's an opportunity for a seller buy down. If you have an open house, why not promote these rates? Even if the seller's not going to participate in a seller concession, you can still promote that 3.25% rate. But if you can get a seller concession of maybe a point or so, it gets it down to a fee of less than 1% for your buyers. So again, it's a good open house tactic. I highly recommend it. I can help you with those flyers if you want to call me. So here we just want to remind you about the USDA program. It provides 102% financing with no mortgage insurance. 2% replaces the mortgage insurance. It's the guarantee fee, and you have to. It is income limited. So here on the Big Island, the income limit is $87,850 per household. It does have debt-to-income ratios limitations. The housing ratio has to be at 29%, and the total debt-to-income has to be below 41%. You can go over this with some, with some good reasons, but typically it's lower than most loans. We can use alternative credit, 620 FICOs, and 3 years after our foreclosure or bankruptcy. Now look at today's pricing on this. This is 100% financing, 3.375, no origination fee, and they get 2.23% back from the lender to pay closing costs. That's unbelievable. And it has a practical limit about $400,000 to $450,000. Depending on the income that the person earns. So it's a great program, much better than FHA if you can qualify inside their guidelines. And then HARP 2, just remember that they've removed the loan-to-value cap on refinancing for Fannie Mae and Freddie Mac loans. You have to have originated a loan before May 31st, 2009, and a loan has to be owned by Freddie Mac or Fannie Mae. And you can have an unlimited LTV, so you could owe $400,000 on your home, and the home could be worth $200,000 and still get it refinanced. Has no mortgage insurance. If your current loan has no mortgage insurance, it's good on all residential property, primary, secondary, and investment. It's good with you can only have a mortgage late in the last one in the last 12 months, none in the last 6 months with Freddie Mac, and no 60-day late in the last 12 months with Fannie Mae. Generally, you have to have a FICO of 620 or more, but I've seen them actually waive FICO and income requirements. So that's why I think it's best to go through a broker, is because we can find the best lender for this. Some lenders won't require FICO or income verification. So again, I think you should use a broker. Last thing I want to mention to you is that I have this video talking about why buyers should buy now, and fundamentally the interest rate has become more important than the price that the person is going to pay for the home. So there's no reason to wait around anymore. There's little chance housing prices are going to decline any further throughout the Hawaiian Islands, and we're certainly at the all-time low for mortgage rates. So it's the best time there has ever been to buy property here in Hawaii. And I think with the foreign investment coming in, we are going to start seeing real estate prices rise here in the Hawaiian Islands. And finally, if you want my mortgage calculator for your smartphone, it's good for the Android, the iPhone, and the BlackBerry, and it will show you today's mortgage rates. It will always be on your iPhone. So anytime your client asks you what the mortgage rates are, you can simply email them directly from your smartphone. You don't have to call me. So go to your app store, search for Loan Apps, LOANAPPS, download the software, and then activate it using my cell phone, 808-896-6800. Just don't enter the dashes. So if you have any clients that have questions about mortgages, I'm available 7 days a week at my cell phone number here, 808-896-6800. And I hope we have a great week, and we're certainly going to have a great summer with these low mortgage rates. Aloha.